Pengeluaran dan pengedaran vaksin Covid-19.
Category businesses are affected.
Hi, I'm Nur Akilah Humaira binti Muhammad Sabri, matric number 280198. Okay, for this video, I will present about why Islamic Fintech is relevant amid COVID-19 pandemic. Islamic finance is designed to comply with the principles of Islamic or Sharia law. The incentive for using Islamic finance is that borrowers and issuers of Islamic debt can gain access to Islamic institutions and thus a much wider base on investor by demonstrating compliance with the principle of Sharia law. There is already a compelling track record of successful project financing compliant to the Sharia. And the objective of Sharia finance are in very broad terms to make sure that there is a balanced partnership between parties and that there is a component of profit and risk sharing that underpins financial transactions. Okay, first, why Islamic Fintech is relevant amid COVID-19? Because it opens up more opportunities. Islamic law or Sharia law prohibit charging interest on financial service or riba. Lines are blurred with common cashback rebates and discounts. Clerics are divided on whether they are considered riba. Recently, Malaysia's top Muslim clerical body issued a decree that deemed virtual money acceptable and that it can be used for Sharia compliant payments provide meet specific condition. Evidently, it's successful. This presents the region's fintech firms with a big business opportunity. These companies have been working hard to be innovative while at the same time trying to ensure that their services are Sharia compliant. Islamic Fintech prefer partnership when it comes to market engagement, as they are a crucial growth strategy for Islamic Fintech, with the more sought after partner being other Islamic Fintech and Islamic banks. Okay, next, why it is important? Because it encourages digital efficiency for investor and enterprise. Big data, blockchain-based smart contract, incentive and artificial intelligence (AI) present an opportunity, with signs of this technology being adopted by Islamic finance players. Focusing more on smart blockchain contract could facilitate Islamic Fintech grow as this technology develop product standardization, efficiency and competitiveness against conventional peers. Takaful technology is a key area which offers the ability to improve pricing, product design, handling and distribution channels with regard to claim. There has also been increased adoption of peer-to-peer crowdfunding and encompass real estate and small and medium-sized enterprise within the Islamic Fintech startup space. Untapped opportunities include the use of big data and AI for Islamic financial service, as well as blockchain solution in areas like trade finance. What's more, smart contracts based on blockchain enable better transparency and standardization as service provided by Islamic banks, with tangible indication of these lenders adopting that technology. This could be a way to convert the sukuk market to digital platforms that offer lower costs for investor and increase transparency. Besides, why Islamic Fintech is relevant amid COVID-19? Because it allows for business inclusivity. Islamic Fintech contains a prime example of a business advantage that can come when promoting inclusiveness and acceptance between local market. Contrary to popular belief, it does not limit business but rather encourage the expansion of the business into potentially profitable untapped market. It could also lay a strong foundation for future customer loyalty. Inclusivity has to be on the modern business executive agenda. Not only is it the right thing to do, it also makes good business sense.
Alright, next we move to another main point regarding on why Islamic Fintech is relevant amid COVID-19 pandemic. So Islamic Fintechs provide significant reliability in terms of financing through a massively affected unemployment until the lingering global financial uncertainties. The COVID-19 pandemic had also left us with yet another fact, which is the financial landscape in the post-COVID-19 era would be almost presumably never be the same again in an instant. But even so, Islamic banks might have sufficient loss absorption channels to overcome the nearing difficulties. Even though we do notice that if the COVID-19 outbreak prolongs, it will lead to many other causes for quality and profitability issues. According to Fitch ratings, Islamic financing proportion of total system loans is supported by regulatory environment that provides fair competition, which is including the banks that support and promote Islamic products. As a result, in the new future, whereby the economic agents gaining more and more confidence towards the economic climate, Islamic banking products such as Alqad, which is lending product, is also likely to develop faster and be competitive as conventional loans, whereby Islamic Fintech can be utilized as its catalyst to accelerate the process. Next is enhancement of consumers' awareness on ethical financing efforts. So once again, by referring to the statement from Fitch Ratings, in Malaysia, it is anticipated that 50% of the country's banking assets to be Sharia compliant by the year 2030, as this sector's development may outpace conventional banking. Loans that adhere to the interest restriction are expected to grow by 10 to 15% per year over the next 5 years, outpacing 5 to 7% growth seen in non-Islamic banking. Furthermore, by emphasizing on value-based financing, which advocates for the protection of society and the environment, it could assist stimulate demands in the context of increasing preference in ethical investment or financing. Next is to facilitate zakat as it's aligned with the long-term and ethical solutions. Though zakat is not known as our country's main taxing method, it serves the same purpose as income redistributive tool, whereby it functions as a compulsory welfare tax of 2.5% payable by all Muslims with wealth above nisab. It is a monetary donation to the poor that promotes collaboration, fair dealing, transparency, and unselfish expenditure for those in need. According to the United Nations Development Programme, the annual zakat contribution in Islamic world has reached the amount around $1 trillion, providing a key source of sustainable development goals and SDGs financing. These include renewable energy projects in underprivileged populations. Through Islamic microfinance arrangements, zakat funds are also used to support small and medium-sized business. Certainly, fintech is undeniably relevant to be utilized and facilitate the management of zakat collections and distributions. And after the series of trying time we had seen due to the COVID-19 effects, as fintech fits financial service with the capability of technology to smooth out the operations of this purpose. So to conclude, amid the COVID-19 and as we are committed to recover from unwanted effects of it, Islamic Fintech is capturing the interests of both Islamic and non-Islamic nations. Islamic Fintech, among other segments, helps to spread the world Fintech's prospects, allows for company inclusion, and provides even stability during these trying times. So that's all from our group. Thank you.
Fantastic.